What the Fear Index, or VIX, may be signaling. First, just a quick basic fact about the CBOE Volatility Index, or VIX, also known as the stock market's fear gauge. The lower the reading, the higher the complacency among investors. Higher readings indicate increased investor nervousness. With that in mind, let's look at a revealing chart from our January 24th U.S. short-term update. As the thrice-weekly publication notes, the bottom graph shows the CBOE Volatility Index, which we have inverted to align with the S&P index at the top. The VIX made a closing low of 12.07 on December 12. Since then, note the succession of higher closing lows relative to higher highs in the S&P 500. Is this subtle sign of a loss in investor optimism a signal that the market is about to change trend? Only time will tell, of course, but some recent headlines are already reflecting the message of the chart. Financial TV show host says the market is ready for a pullback. The well-known pundit goes on to say that he's not a bear, just that some stocks which have risen parabolically may be due for a correction. So yes, some worry is beginning to creep into some financial articles about the stock market. Yet make no mistake, optimism is still largely dominant, just not quite as dominant as it was during the first half of December. As the January 24th Elliott Wave Theorist Interim Bulletin notes, the stock market continues to sport historically high valuations and elevated optimism, as recorded throughout dozens of sentiment and valuation indicators. So indeed, the VIX's succession of higher closing lows is a subtle indicator, which by no means diminishes its value. By the time the stock market gauge becomes overwhelmingly obvious, well, damage to portfolios may have already occurred. Here's what you need to know. Elliott Wave International's publications show dozens of market indicators which can put you ahead of the crowd. Learn more by following the link below this video.